What's up, everybody? Chris over here, founder of Pollinate Trading. Like this video right now before we get going. Let's get it liked. Like, subscribe to the channel. And of course, if you want to get random emails about what really big things going on that are important in the market when they happen, before they happen, maybe even right after they happen, subscribe at pollinatetrading.com/subscribe. Let's get right into the markets. And let me get my screen up for you here. All right, we are looking at the Nasdaq weekly chart right now. Previous weekly high, 15,708. That's the all-time high on the Nasdaq futures. Back at the end of August, was it? Nope, that would have been the beginning of September, first week in September. Last time we saw the 15,000s, 15.7s, I should say. And we went straight down to 14,367. So about a $1,400, give or take, a drop down to the lows, enough to scare the pants off a lot of people. And I don't know, form some sort of like debt ceiling adjustment or whatever in the government. Who knows? Stuff happened. There we go. It started to look like we were getting, it was getting over with. Let's get that out of the way. It's starting to look like it was getting over with here back at the third week in September. We had a big power reversal, hammer in that uptrend, usually a very bullish sign. But what happened after that? Bulls lost control. They had it. They could have just, all they had to do is just, bang it around out here, and they didn't. They lost it. They fumbled the ball and it dumped hard. They took about a 4 or 5% drop that week, the following week. Came back, rallied up, got in a nice reversal. And last week, bulls took full control again, closing above the previous week. So we basically exited out of our long trades from our long buildup. Sorry about hitting the microphone there. We started build up our long position right up over here. And we loaded up, I think it was about 7 contracts, something like that, before we got to the top, sold half, and then got stopped out of the rest right over here. So a pretty good run, locked in some good profits, gave a little bit back at the end, but that's what happens in trend trading. Plenty of trend traders are still sitting in this. They're not even out. We're in, we're out. We're a little bit more aggressive, and that's just the way I run my business. That way I can push some of the leverage. I can use what's called the market's money when we get going, and let my profits start multiplying in there, and then exit out. So all I needed, we had plenty of reasons to start buying the last couple of weeks, but I like to be a little bit more conservative, and we just needed to get above the previous week's high. So that happened last week, quite bullish actually. Very strong bull week, only up about 2.25%. We started out a little weak, and we closed the week very, very strong, closing at the highs of the week, off about, let's see, looks like about 50, 60, 70, about 70 points off the all-time, or off the weekly high. So pretty strong week right there. That signals that it's time to start looking for long entries on the Qs again. So I'll drop it down to the daily, and we'll start finding what we're looking for. But as always, we need to identify the market regime. We're in a bull quiet regime, or a blended bull regime, which is even better. And we'll be heading, typically that means we go higher. Now we could spend the next few months just, not putting in too big a highs and just going sideways. And that's certainly fine. We don't have to have these, 8,000 to 16,000 point moves all year long to make money. So we look to buy weakness. Best looking sell setups in the world. When they fail, this is the best looking sell, because this was the best looking buy setup in the world. It failed. So bears took control. Okay. It's just that in indices, especially an index like the Nasdaq, the incentive of the Nasdaq by design is to go higher. That means what they do, the index creators, is they kick out the worst performing companies, and they only put in the best performing companies. So by design, companies that are outperforming are going to be part of this index, which means we're going to have a better than normal opportunity for these prices to go higher. So instead of trying to catch the world's greatest market top sell short, we're just going to stick with statistics, keep the narrative out of it. I don't really care what the narratives are. I don't care what everybody's worried about or anything. It's just, this is just how it works. Statistically over time, Nasdaq spends about 80% of its time in the blended bull regime. And what's characteristic of the blended bull regime is the prices rise. So we'll be looking for opportunities down in the bottom range to start building up positions and ideally get to the 17,000, 17,200 to 17,600 area is our next target area. Again, that could take months to get there. It could take a few weeks, but we just want to start slowly building up a low risk position to catch that. In the trading lab, we'll be going over it daily, identifying where our trades are going. I'll be sending those alerts out to our members. In addition to the people in our group, they'll be able to follow along as on the intraday as we find these trades. We have some people who will be hitting it with some options on the QQQs. And I'm going to talk about Apple here in a second because we're going to be picking up some Apple calls here into the next leg higher. I think we're going to have a little bit more performance out of Apple than we will out of the Qs. So as far as me, I'm going to be trading the futures, the Nasdaq futures, the big contract. However, if you don't have the margin to trade the big, you can trade MNQ futures. And if you don't trade futures and you want to stick in the options realm, QQQ calls is what a lot of the members are doing. And if you're underfunded, maybe hitting it with the options is a better way to have access to building up an account over time. So let's drop down to the daily. And as always, first thing we want to look at, we are in the bull quiet market regime. Let's go ahead and pull up our, so 16,000 on the month is the close. We got a close above 16,000 at the end of October. It's halfway through the month right now, so it's certainly possible. That would signal a blow off top. And of course, that would be right in line, possibly in line with our trend line, top of the top of that, that trend. If we got up there and closed this month above 16,000, we would be looking at another sell-off similar to what we had here through September. So there's a lot of upside to go. Also pay attention to, let me just turn these off. Let's pay attention to last month's high and last month's low. Actually, this would have been last month's low. Okay, so this is what we call the neutral regime, the neutral range. So as long as we're below last month's high and low, we're in a neutral environment. So we want to be buying down, and the midline of that being on the lower end of it means you're in a generally bearish, it's neutral bearish. And if you're above it, it's neutral bullish until you're above it or below the previous low, last month's low and last month's high. Until you're above those, you're just in neutral regimes. So we could actually bang around quite well. We may find ourselves doing that. And if that happens, then our SQN would drop into that lighter color and give us a neutral rating, which is where we would start doing these mean reversion type trades, which we are somewhat looking like it's a possibility. Those looking strong bull at the moment. You see how that bottoming worked 2 weeks ago, and we came back and retested it, held the test, and then 3 strong days to close last week. So now all I'm looking for is just a little bit more weakness to start buying. The real trade would have been getting in on the move above last week's low. But I was waiting for the weekly to signal the setup first. Once the weekly's on your side, then you can start, then at least I start looking to get in. So again, in the trading lab, we'll be all over this trade like we have been for the last couple of years, just crushing NASDAQ cycle after cycle, campaign after campaign. bottom after bottom, craziness after craziness, just ripping this thing from the April lows, April 2020, getting in. It was here, 77.80. Let's say we've pretty much caught 1, 2, 3 big campaigns on this, and we traded 2 neutral campaigns for a double. The index basically went from 7,800 to 15,700. That's a double. That's a 100% move, and we caught all sorts of this. Sold right up here, got in again over here, sold over here, traded this one sideways, traded a bunch of sideways trades here, got long again, caught this one, and now we're looking to trade this one again. So we'll see if it puts in another trend for us. If we can get a nice long campaign, it could last a handful of months. That would be great. We could get ourselves up to that 17,000 plus area. Or if we bang around like we did over here and like we did over here, that's fine. We know how to trade this stuff. We have the proper tools for that. So Nasdaqs are right now, Nasdaq, we are just waiting for the best sell setup in the world to happen, and we'll just start adding to our positions. On to Apple before I get going into the good stuff. We have earnings coming out later this month, last week of the month. Remember, I've been talking about waiting for when we were going to get into Apple. We ended up getting back down into, see this little area here has been, it's spent a lot of time in this range. As you can see, it peaked up into it, gave it all up, peaked up again, gave it up, and then blew through it and then came back down to test it. So now it looks like we've done the testing of the area that we need to do. That even goes back further. So all the way back to 2020, this area has been of interest. Once we blew out of it, now we had to come back and test it. It looks like we've got it tested. And from that test, on my notes, I have Apple. Where is Apple? 165 areas, what we're looking for on Apple. So somewhere up in here on Apple is what we'll be looking to catch. So we're starting to see, again, just like Nasdaq, we had that bottom. Let's even look at the weekly so you can see how similar it is, right? See how similar it is. Had that blow off, move up top, came down, finally bottom, and now we're taking off. So now we're gonna be looking for getting in over here somewhere and catching a move up to the 165. Up to this range up here. So that's, 1, 2, 3. Let's just have a look. If we were to use this range, it's about 3-to-1 risk reward trade right here. And who's to say we stop at 165? It's just that that's the target we're looking at. So we risk $1 to make $3, about 3.3. So that's generally the trade I'm looking for on Apple. We could certainly get much higher, but that's the very conservative. That's the very easily conservative move that we could expect to see. And 175 is also on the cards when 165 shows up. And of course, the big round number of $200 is within target. If we make it up to 75, that's a 4.6 to 1 risk reward ratio, which is absolutely doable if we look at the measured move range from over there. So 175 target. Again, when I'm looking at equities, I'm only looking to trade on tradable assets. I'm only looking to trade on options. In positions that I'm holding, like Ford and Coinbase and some of those others, those are actually equity that I own, and those are just positions I'm never going to sell. So it's a different, there's no, even though we hit 175 and I'm in Apple, doesn't mean I'm selling it because it's a 165. That's the difference. That's why I use options to trade those things. Okay, let's get into the bonds. Now we caught I sent a trade out to the group last week. We had a beautiful failed breakout retest. We got long over here. We got long above the 130.30 area, sold up the 131.15 area, I think, right in here. And then you see this thing is going down. Bonds are going down at the moment. We've got pretty much across the board, not just in the US, but we've got euro dollars, we've got boons, and we've got, in other words, we've got rates rising. So interest rates are starting to rise, and that means bonds are going to start going down. So, you know, if you look at that, that's pretty much just bonds have gone straight up since, let's see how far back we can go with that. So this is the yield, US 10-year Treasury yield, which the price of the bond goes up when the interest rate drops. So as you can see in like 1983, the interest rate on the US 10-year was trading at, was quoted at 15.82% interest. It made it in March, it made it down to 0.63%. Currently trading at 1.57%. You know, generally speaking, the 150 level has been something that everybody has had an opinion on. For some reason, that big round number of 150 is something that everybody finds interesting. And as you can see, yeah, let's see if I can get there. We go. As you can see, it's done. It has been a number. It has been a number that, you know, back in 2012, it touched, it breached in 2016. And then this past year, during COVID, completely blew apart and we regained it. So we're back to that 150 level that has historically been somewhat interesting. Who cares what, you know, who cares what the actual number is, other than, you know, people run a lot of models off basic math with very big positions. So I guess this 1.5 number seems to be significant somewhere in here. But back to the actual tradable contract. So instead of just looking at the interest rate, this is the contract that we trade. And as you can see, we came down and we touched this level and bounced off it. Okay. It looks like we're going to start breaking and we're going to start getting rising interest rates on the longer duration time periods. If we look at the 2-year, you can see that it broke pretty hard this past week. The past month, it pretty much broke pretty hard. So the short-term interest rates, 2-year, so we've been looking at the 10-year, the 2-year note, which, you know, means that short-term rates they're expecting to drop rather dramatically. That happened. And let's look at the 5. That's wrong. There we go. The 5 even more aggressively, and then we get to the 10. And see the 10 dropped and it's kind of held right there. So let's look at the 30-year, the big one. And it hasn't quite got there yet, but you see the short term, the short side of the shorter duration on the yield curve is leading, and the longer duration is kind of taking its time. So short-term interest rates are going to start going up faster than the long-term interest rates are. Now, what I've been looking at is the GE. I'm looking at the year out. GE. Where am I at? Z. There we go. So the euro dollar futures on not the currency, but the euro dollars, the interest rate broke last week, and it broke pretty hard. It was a pretty big move right there. It looks like, you know, across the board, rates are going to start going up. Europe's going to start going up, and at least the United States is going to start going up. So let's look at the Bund, the euro Bund, and you can see same sort of thing. So this is the bonds on the European market, and same sort of thing. It's all starting. So it's important because rates kind of have everything to do with growth, because if you can get growth, if you can, you know, borrow money to invest in the future at a very, very low rate, you can invest in growth very heavily. If interest rates start to rise again, then the excitement on growth, Nasdaq, is going to start probably taming to a lesser extent. Though we are at historical levels, it just means that there's going to be things that are going to have more appeal, that are going to be a little less risky. Or at least investors who are going to have a large amount of money are going to have places to put their money that they didn't have places to put their money before. They had to be in growth because everything was negative yielding. If you could borrow it, you know, if you were earning like 1% and you were borrowing at 1.5%, you were losing money, right? So the only thing you could do is there was negative interest rates. But if they start rising, they actually have positive carry in the future, and you can start seeing good places to go. Now, I'm not going to get all into macroeconomics. That's for Alex at MacroOps. You go to him; he'll give you sign up for his free email. He'll get you set up on the macro side. This is just what's happening, man. This is just what I'm a trader. Things are just moving across the market as they do. We're going to see the effect of this. If it hits, we're going to see the effect of it. And we'll get into the crypto stuff sooner too. Now, off to currencies. Okay, so if we're talking about rates, then we're probably going to have an effect in the currency market, right? So this is, you know, the main, the 7 main currencies. So we've got the US dollar, CAD versus dollar, pound versus dollar, Kiwi versus dollar, Aussie versus dollar, franc versus dollar, euro versus dollar, and then the yen versus the dollar. Okay, and we're going back 6 months. So this would be the beginning of so this would be year to date right here. So the very beginning of 2021, and what we can see is that the yen is down about 10% versus the dollar. Okay, we started shorting this thing last week really aggressively. Well, we got long dollar versus the yen, and you can see the best performer is the dollar, and the worst performer this year to date is the yen. I believe that the yen is actually on a collision course back to the 2015 price level, and I'm positioned accordingly. I've been looking at the dollar yen, the CAD yen, the Kiwi yen, the Aussie yen, and the pound yen. The 2 best positioned currencies at the moment are the dollar yen and the pound yen. So I will continue to be long dollar, short yen, and I will continue to be long pound, short the yen. So more aggressively short the yen and more aggressively long the pound. So let's have a look at what that looks like here. Just to give an idea, this is the level we're looking at. 126 or so is the 2015 highs, currently trade at $114 yen. So we've got ourselves about $11 in difference on that price to get there. You know, it can get there quickly. Look, this is what happened from August 2014 to December 2014. August 2014, we were trading at 105. By December, we were trading at 121. So $16 move in the dollar yen within a few months. Totally easy to do. Again, we saw it in 2016, a break above 104, got to 118. So 14 cents it was about what, 2 or 3 months, very quickly. When it moves, it can move very quickly. So I'm expecting a really quick move. And I sent a tweet about this earlier in the week. We have these stop ladders. I call them stop ladders, where all the stop losses, all these big stop losses are sitting here at these levels. You've got 1, 2, 3, 4 attempts, at least 5, you could call it 6 even, attempts at this 115 level, generally right in here, that we've already taken out this level here. So the next level is just 115. It's not very much further, 114.5, 115. Once these get taken out, then you can move very quickly up to 118, right? And there's not much left between 118 and 126. So you could quickly take these, and move all the way up to the 126. I'm not saying that the 2015 high has to be the stopping point. It certainly doesn't, but it's the biggest area out there in recent time. And you go all the way back into the 2000s before we ever got above that. And it's been dramatically below it for quite some time. Let's pull up a different one. Let's check it on IDC, and you can see where back when Japan was all the rage before they blew up, I mean, we were looking at $300. I mean, it was just massively overvalued their currency, and they've pretty much undervalued the currency, and that's how they inflated the Nikkei, only to get destroyed in the 90s, and here we are. So we could find ourselves back up to this 126 level fairly easily, and we still have a whole lot of historical prices to recover on. Let me have a look at the pound yen. Now the pound, remember, I keep believing we're going to see a 175, but the 2015 high on the pound is right around that 196. So when I was saying 175 to $2 or 200 on the pound yen, that's quick. You could get there. And again, we did it a handful of years ago. It wasn't too long ago that we did it during, QE, quantitative easing. When that stuff was happening, that's when we got ourselves up to those price levels. So for me, I'm seeing that now. That's 106, currently trading 92 on the yen. On the Kiwi, that's 94, currently trading at 80. So the actual, you could look at the CAD yen, the Kiwi yen, the dollar yen, and the pound yen, and all of those are looking quite good. Now, if you're bullish on things like, let's say, gold, you might look at Aussie. If you're bullish on energy, you might be looking at CAD yen to do that trade. That's another way to express that energy trade. See if we can get it here. See, it's not as aggressive, but the 2015 level is up here on the yen. So it's a much more of an equilibrium type trade because it's not as wide as we are here, right? There's a pretty big, actually, let me go back to this one. You can see the real difference. You can see how much of its life was at the pound versus the yen's life was actually in this general area, which is something that I've been talking about for at least a year now, since we started these moves during last summer. When we started getting long pound yen last summer, 136, we're already $20 into it, and we've still got another $40 to go before we even get to the bottom of the range here. Bottom of the range is right here. Okay. So there's still move up into the 250 area available on the pound yen. And that's what I'm interested in. This is the trade. This is the very asymmetrical trade that is available, pound yen. Continuing to find that one to be of a lot of interest here. That's going to be the one I'm focused on. All last week I was long. All last week I was long the dollar yen, riding the move up. I expect dollar yen. Whoops, wrong screen. I expect dollar yen. Let me get back to the historical. I expect very good things out of the dollar yen. Again, if I think we're going to start seeing a strong dollar coming through, if you look at it, this is kind of where that range is. So the bottom of that range is generally at the 126 area. It could be a little bit less, could be the 121. We've got a lot of room to get there, and then we can play around with what's in here. But strong dollar, pretty much expected. Pound yen, I really think is going to be the outperformer for us. And again, in the lab, we will be adding to positions. We've added to our position 3 times last week on the dollar yen. So you know, if we bring this closer to scale, got in, we did Aussie yen the previous week. Last week, we took 3 trades to get into the dollar yen all the way up. It was a great week, up almost 2% on the week in full. Boom on the breakout, boom halfway, boom as we were moving into the top. And now we're looking to carry this thing on. Again, I think we're going to have, quite a good move here. You know, we're going to run these stops quickly. We're already sitting on this, this stop area right in here. Like see how many stops we have just sitting here. Boom, boom, boom. Just everybody, like this is the 1, 2, 3, 4, or at least 5 attempts to take this out. And now look at that. Look how fast we've moved from this is just the beginning. This is January. This was COVID bottom. We went back down to it, tested it, and we've rocketed. We looked to test that COVID bottom, couldn't do it. And since January, the beginning of the year, we started right around the beginning of the year trading at open 103, it looks like. Yeah, 103, currently traded at 14. So we're $11 in to a $26 trade. So $23 move from here. And we're still like kind of halfway there. We're about like halfway into the move. So gets a little rocky in here, which is great because that's what we need. We need the best looking, the best looking sell setups in the world to fail. And if they fail, we're sucked in. We've already got our position on. So we're just looking to get, we're just looking to have a second position on, or keep building this position. And we're looking to get another position in the pound yen. So let's see. Okay. Let's see what else okay, let's get to Bitcoin. All right, Bitcoin. Everybody's talking about the weekly close, closing above whatever the weekly all-time high close would have been, 59,979.26. Currently at 59,854. So we're a bit below it. I think when everybody started to mention the fact that the closing basis was there, they're going to start getting cute. Who cares? We're right up at the top. We're right at all-time highs. We should expect some volatility up here, but we have a target at 101. Our next target on Bitcoin is 101. Should be fairly easy to get there. And when we do get there, that'll even be more volatile. We'll be quite volatile from there. So that's about 100% move, little under 100% move from here. Ethereum, right now, our portfolio, we're long Bitcoin, we're long Ethereum, we're long DOT, we're long Solana, we're long EOS, and we're long Orchid, so OXT. That's what we're in the trading lab. We got ourselves into some of those really good positions over the last few months. We got more trades coming up. Definitely check out the lab if you want to, if you want to get into those trades. You don't have to, of course. It's it's totally up to you. Totally up to you if you'd like to join us. Let's see, Ethereum DOT. So let me go over DOT real quick. This one's important. We got into DOT last week, down here at 35. We have our stop in here. They released their, parachain or whatever. They pushed out an update, and we had a big, powerful move, about a 20% move up here. And we've just been holding up in this range here. Expect probably a move to retest the breakout before we take off. However, we are in this big melt up again in crypto. And, we could see new all-time highs taken out, taking out the 50 or so dollars, 49 or so level. And then when that happens, we're start looking at a $90 price target. It's $89 or $90 price target on DOT. So there's more than a double still available in DOT just on the next move. So when we start looking at smart contracts and DeFi, and that this is one of the beneficiaries is probably going to do something similar to what happened to, we saw it with Sol, which, kind of, if we look at where it is from the May high of 55, trading got all the way up into the 200s, and same with Cardano. Up to almost, got up to $3 with a low of the $1 area. There's a lot of opportunity here in DOT when we get this next phase in crypto, and when we start getting the blow off tops. I mean, we could see multiple $100 moves on DOT. We could see, I could see this thing. I currently see this thing at around a $400 level. So, that's a 10x from here. A 10x is totally doable on DOT, and I wouldn't be too surprised to see that as we enter into the last phase of this major bull. And it doesn't even need to be a major bull for that to happen. We may just stay. We're talking about DeFi, right? I mean, we could definitely see this this thing happen. In a very quick way. Okay, let's see. We've got that. Yep, that's about what I got this week. If you got any questions, hit me up on Twitter at Chris D Macro. Hit me there, or do subscribe to the newsletter. If I have some of these trades that come out, you guys are welcome to them. And if you're interested in joining one of the best trading communities in the world, join us. We're doing some great stuff in the trading lab. We're going to be, we cover crypto, we cover equities, cover futures, options, metals, all the different energy, all the different markets out there. Let me know what you guys think. Be sure to like and subscribe to the YouTube channel. Help me get that growing. I'll start putting out more content here. The more feedback I get, the more I'm interested in learning what you guys are looking for, so I know what to deliver. And that's why I'm here, man. That's why I'm here. So have a wonderful trading week ahead, everybody. And we'll catch you later. Love you all. Bye.